Welcome to the Transparent FX Academy. I'm Nick and I'm a top order trading view with over 190k reputation points. In this video, I'll speak about USDJPY. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that the market is starting to invert trend from a monthly standpoint. The market clearly was in an uptrend, creating very strong bullish moves. Clearly in an uptrend, because the definition of trend is the creation of higher highs and higher lows. Right now, we're seeing that uptrend breaking to the downside because now, for the first time, we're seeing a lower high. The previous high was here. The market failed in creating a new higher high after creating an equal low. And now the market seems to be inverting to the downside and shifting back to the creation of monthly lower lows and lower highs. So from a monthly standpoint, if we have to look at the big picture, it is clear that the trend of this market is inverting from a bullish trend to a bearish trend. And institutions are moving back to the bearish side for this market. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep that in mind and drop down on the weekly time frame. Now, from a weekly perspective, we can see how also this inversion of trend from a weekly standpoint is quite clear. We went from creating these weekly higher highs and higher lows. Now we shifted to the creation of weekly lower lows and lower highs. The market is also testing and rejecting to the downside exactly the previous weekly support turn resistance, because what we can see is that from here, this previous rejection to the upside was created. The market then broke to the downside that support. So the previous support became resistance here. The market is currently testing that previous support and resistance and has already started rejecting it to the downside. So in a situation like this, more bearish price action could be expected away from this level, potentially completing this weekly impulse correction and impulse pattern to the downside. So also the weekly time frame does seem quite bearish. Dropping down on the daily time frame, what do we see? From a daily perspective, what we can notice is that the market is again below a very important consolidation area for this market, because what we can see is that right here we have this huge block. We have a huge block of candles. Usually zones like this one act as very strong structure levels for the market. What we can see, in fact, is that the market went and tested exactly that same zone, went all the way testing the high of the area, and now the market is rejecting that zone to the downside. If we look at the most recent price action, so we focus on this part, we can notice how the market is at the moment back below the previous resistance, because in this move to the upside, the market here changed direction, then tried again but failed with the creation of this red candle, then broke above, broke back below. What this means is that this previous level of resistance, now that the market is below it, is again acting as resistance. And since institutions are already shorting, as we will now see, if the market will go and retest this level, there is a good probability of seeing more institutional shorting inside of this zone, which at that point could further increase the probabilities of a potential rejection to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for the JPY, the first thing that we have to keep in mind is that if we are looking at the JPY, we are actually already looking at USDJPY. More importantly, JPY USD, because all currencies, as I said, are always traded on the spot against the USD. So if institutions are longing the JPY USD, they are shorting USD JPY. And that is exactly what is happening because net positions are getting massively increased. We went from 122 to 172K net positions, with institutions increasing their longs and decreasing their shorts, with longs now sitting at 194K and shorts at only 21K. So institutions have been longing JPY USD aggressively, so shorting USDJPY, which is what we're currently analyzing. So let's keep in mind that institutions are already shorting USDJPY, and we can also see that at this point this downtrend is quite expected because, as we have seen, institutions are shorting this pair. So on the retest of this level, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection to the downside for the market to complete this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.